Welcome to today's daily report market analysis videos on Thursday the 5th of March with me, Richard Perry, market analyst at Hantec. There has been a bit of, well, I say a bit of volatility, a lot of volatility in recent sessions, certainly on Wall Street. This is significant moving higher and lower run that we've had has driven the S&P 500 back higher to, well, back above 3,000 or 3,100 I should say, and sort of closes a gap that was open at the beginning of the week or last week. And effectively what this does now is it means that the outlook really is starting to improve on a broad basis on equities, but the volatility is still there. And what we've got this morning is futures suggesting that there's going to be another drop back lower again, 1.4% lower on the S&P 500. Now, we've seen in recent days a policy coordination of the global central banks, the major central banks, rate cuts from the Federal Reserve, from the Reserve Bank of Australia, from the Bank of Canada. Sort of the expectation of a rate cut from the ECB even could well be seen. A little 10 basis point cut to the deposit rate could well be seen, although sort of in the balance seemingly. But the Bank of England could also partake as well. So all these global central banks are starting to cut rates. Whether that's the end of the rate cut or not is another matter, because we've seen that the Treasury yields have fallen sharply, certainly on the back of that surprise Fed rate cut on Tuesday. The Treasury yield on the 10-year had been back above 1% this morning, but it's just dropped back below it again, as a slightly more negative outlook has started to take hold once more. This morning, what we've seen is the yen starting to accelerate to the downside once more. It's testing that 107 big figure mark as we speak. Gold is generating some support and pulling higher once more. That safe haven play for gold is back in once more. And also equity markets, as I said, the S&P 500 futures were lower. Well, translate that to European markets and we're seeing further losses to the downside as well. The dollar had been finding a basis of support, but as Treasury yields have ticked back lower again this morning, we've seen that the dollar is suffering against sterling, against the yen, and against the euro, and it's not all that great in terms of performance once more. So really interesting moves there. But the other key market to watch today is oil. We've got an OPEC discussion as to whether to cut production again. The expectation is that the OPEC group of countries will be agreeing a production cut, maybe as much as 1.5 million barrels per day. Whether OPEC Plus, i.e. Russia, agree to that and partake in that will be the key swing factor, I think, as to whether oil price can start to recover in any meaningful fashion. Oil is basically consolidating at the moment, waiting for this decision and the outcome from these meetings between OPEC and also OPEC Plus, and they're going to be in the next day or so, and we'll start to see, I think, the next trending move in oil in the back of that. But certainly at the moment, equity markets back down again as the volatility continues to play out. But on a broad basis, given the fact that the S&P 500 was sort of 4% higher yesterday, well, we've seen that we are starting to pull off the lows. Whether it's the low or not, and whether we're going to get a retest is another matter. But certainly at the moment, sort of a basis of support is starting to build, even if markets are expected to be back lower once more today. Right, in terms of data points today, not a great deal, bit of US focus, sort of certainly not top tier data. We've got jobless claims at 1:30. And that's expected to be 215,000, down from 219, so there or thereabouts where we've seen in recent weeks. And at 3 o'clock we've got the factory orders, which are expected to show a January decline on the month of 0.1%. A couple of central bankers to also look out for today. Mark Carney, now he is leaving the Bank of England this month to be replaced by Andrew Bailey as governor, but he gives a speech today at 5 o'clock. Could be interesting, especially given the fact that the Bank of England could well be about to cut rates. And also the Bank of Canada's Stephen Poloz, and Poloz was obviously part of the Bank of Canada that cut rates by 50 basis points yesterday. So again, have a look out for him this afternoon, 5:45. Right, that takes me on to my charts today. I was talking about oil earlier, and what we've got as my chart today is the Brent crude price. Starting to find a basis of support, as we've seen in equity markets. But is it sustainable? Well, we've seen that the spike rebound higher we saw on Monday has not really followed through. It hit the 23.6% fib level retracement of the big sell-off and turned back lower. Interestingly enough, yesterday's high hit the old low of February's old support, and that became resistance yesterday, falling away. Again today, a little bit of an intraday rebound, but falling away. We can see this forming lower highs, arguably lower lows. Is this going to be the end of this recovery before it's even got going? I think obviously the anticipation of the OPEC cuts certainly helped to find support earlier on in the week, but just as sort of question marks surrounding Russia's involvement in the cuts, we've seen oil starting to drift off again. So I think that we're going to see some volatility in the next couple of days, certainly surrounding the announcement from OPEC. But technically speaking, you need to see the market back through 53.9 to really suggest a recovery is building. That would be forming this recovery back through 23.6% fib, effectively opening 38.2% fib as the next level. And it would be really what the bulls are looking for. Momentum-wise, there is this slight positive divergence, although the momentum is just hovering at the moment rather than decisively pulling higher. But there is this sort of outlook that Brent has, to an extent, started to build on a recovery. But the question is it sustainable? Well, as I said, above 53.9 is important to continue this move of a potential recovery. A close below 51 figure today would pretty much reopen the lows of 48.40. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.